Friends, you are welcome to my YouTube channel AKD Global Education. In my previous video, Mutual Fund Part 1, I had discussed about equity mutual fund, debt mutual fund, and a hybrid mutual fund. In this video of Mutual Fund Part 2, I shall discuss on balance of mutual funds, which includes solution-oriented funds, fund of funds, exchange-traded funds, gold ETFs, international funds, arbitrage funds, real estate mutual funds. First, I will discuss solution-oriented funds. They are designed to meet the caption need, like retirement funds and children funds. They are having a lock-in period of 5 years. Next, I will discuss fund of funds. In short, it is called FOF. These mutual funds invest in units of other funds. These funds are specialists in analyzing funds, their performance, and formulate strategy to add or remove funds based on analysis. Next, exchange traded funds. In short, it is called ETFs. These funds hold a portfolio of securities that replicate an index like Sensex or Nifty 50. They are listed and traded on the stock exchange. Risk and return of ETF is directly related to the underlying index. ETFs are first offered in a NFO. Like all mutual fund, units are credited to demat account of investors and ETFs are listed on the stock exchange. Ongoing purchase and sale of ETF is done on the stock exchange portfolio. The settlement is like stock traded and debit or credit done through demat account. ETF price real time, unlike NAV or mutual funds, which is computed at the end of business day. ETF's value changes on a real time basis along with the changes in the underlying index. Next, gold ETFs. They have gold as the underlying asset. They closely track the performance of domestic prices of gold. The fund holds gold in the form of physical gold of purity 99.5%. They are also allowed to invest in the gold deposit scheme of banks to a limit of 20% of net assets of the scheme. The actual return may be lower than market returns due to the effect of fund management expense charged and cash holdings. Holdings gold in physical form have issue of security and may be of purity. International fund. These funds invest in market outside India by holding certain eligible foreign securities. Foreign securities include equity shares of Indian companies listed abroad, debt of Indian companies listed abroad, ETFs of other countries, units of index fund in other countries, mutual funds in other countries. These funds provide diversification from exposure to global markets and benefit of investing in asset classes not available in India. Next, arbitrage funds. These funds aim at taking advantage of the price differential between cash and the derivatives market. As they are completely hedged, makes these funds a low-risk investment proposition. These funds having feature of lower volatility similar to that of a liquid fund. Next, I will discuss real estate mutual fund. These mutual funds invest in real estate either in the form of physical property or in the form of securities of companies engaged in real estate business. At least 35% of the portfolio is to be held in physical assets as per SEBI's regulation. These funds can invest into securities of companies engaged in real estate projects, which also includes mortgage-backed securities and debt issuances. Not less than 75% of the net assets of the scheme shall be in physical assets and these securities. Assets held by the fund will be valued every 90 days by two valuers accredited by a credit rating agency. With this, I complete today's discussion on mutual fund. Don't forget to subscribe my channel like this video and share this video. Thanks for watching this video.